So we had another busy week of earnings, namely Nvidia, which I'll get to in a couple minutes. As far as the market goes, the S&P, another new all-time high. Again, it's over 5,000. It closed the week at 5,088. It was over 5,100 briefly. The NASDAQ, again, also the QQQs, I know, hit a new all-time high. They were up around 440. I believe they closed around 435. So again, basically everything is hitting all-time highs right now. I thought this could be a potential negative week, but again, given the Nvidia news, there was no way we weren't going up. Next week, we do still have, there isn't any major companies, but there is still quite a few companies releasing. So again, like I've said time and time again, there's going to be a pullback at some point. It's just a matter of when. Nobody knows when, and nobody knows how deep. It could be 5%, it could be 10%, 15, 20. Nobody knows, and nobody knows when. So trying to time the market, in my opinion, is a bad idea. The only thing you can really do is continue to, my investing strategy is dollar cost average into the indexes. My position is always have maybe 10 to 20% of your money in indexes and the rest of it in individual stocks that can balance things out, because depending on for example, depending on which index you're in, if you're in the SPY, it's going to be heavily weighted towards these big tech names, meaning you're not going to want to own the big tech names if you're buying individual stocks. So again, that's an easy way to balance things out. Now again, technically you could use indexes again, but number one, I like the challenge of being able to beat the market, and number two, I think you can beat the market if you're willing to do at least a little bit of research. And on top of that, again, I think it's just fun, to be quite honest. So like I said, near term, I think we're still bullish, right? I mean, we had good earnings. I mean, it wasn't the greatest earnings season ever from what I can tell. Again, I'm no expert, but I think we had a solid earnings season, right? I mean, did we have any major issues? Like, no, I don't think we even had significant issues, right? Coming forward, again, my prediction still stands. I think we're going to see a pullback later in the spring or in the summer sometime. But again, nobody knows how deep it's going to be and nobody knows when. So again, take that for what you will. Again, speaking of Nvidia, Nvidia released very good earnings. They weren't the best earnings they've released, but they were still very good. They were up about 14% on the week, and they're up about 240% in the last year. So again, as far as Nvidia goes, nobody knows when this craze is going to end. There's a lot of people calling it a bubble. I think that's fair to say, but is it like a tech bubble levels of insanity? Probably not, especially given the fact that they continue to exceed expectations, right? If we look at their valuations here, they're clearly very, 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 very expensive, right? I wouldn't be touching them with a 10-foot pole where they're currently at, but they do continue to exceed expectations. That's the one thing you definitely do have to give it to them. But again, 31 price to sales, 110 price to free cash flow, those numbers are absolutely and utterly insane. I would want those numbers to be cut in a third, right? A third. So again, based on current levels of earnings, in my opinion, they're probably worth 300, maybe 250. Like, again, just back of the napkin math. Sorry. Again, I'd love to hear other people's opinion, but again, I think they're still heavily overvalued. But again, they have clearly vastly exceeded expectations recently, which is why I think they definitely do deserve a rich valuation. But we're talking about maybe a 40 price to free cash flow, maybe 50, right? I mean, that's probably still being generous. I'd say 40, maybe 45. And they're at 110, so again, they got to come down at least 50% before I would start to be interested. Again, just my opinion. Getting into some other companies here, Walmart released earnings. They did actually release good earnings. Again, Walmart's an interesting company. Again, kind of one of those big companies that I don't see them being able to grow fast enough to make an investment worth it over the long run. But if you're looking for something safe and steady, they're a decent investment. But again, they are clearly expensive where they're at right now. I mean, a 37 price to free cash flow a 29 PE. I think that that's still too expensive where they're at right now. But again, a very solid company nonetheless. Home Depot, they didn't release the greatest of earnings. Again, in line with earnings, but again, they did miss sales. Again, another very solid company, but again, they are going to be fairly cyclical, right? They are going to be fairly cyclical. Palo Alto Networks is another company that I'm interested in if they ever got to a fair valuation. They released pretty bad earnings, and they got hit pretty hard on the week because of that. And they are actually more reasonably priced where they're at right now, but I still think they're expensive, right? I mean, the price of sales is still over 10, price of free cash flow of just under 29. I think that's still a little expensive, right? If they came down another 5-10%, that's probably where I would start to be interested. So we're looking probably around 250 roughly, just again, back of the napkin math right there. Realty Income, again, they're one of the most popular REITs out there. Again, they missed FFO, but they did beat revenue. They've been hit really hard, again, mainly due to higher interest rates. I mean, if you go back a year on this company, what are they down? They're down very significantly. I did get out of this company in the low 60s. Thankfully, I did have a small position. I think my position was around like 68, 67. I got out in like 62. Again, it was just not worth it in my opinion. I think we're going to see higher rates. Maybe not this high forever, but I think it's barring a major crash. I don't see us going back down to near 1% or below 1%. I think that we'll probably settle 2, 3, maybe even 3.5%, and it's going to take longer than expected to get down to that. So again, that's why I would be skeptical of REITs, especially ones like this that are very slow growth. And I mean, a lot of people say, "Oh, look, they got a 5.8% dividend," but you can basically get that with bonds. So in my opinion, I wouldn't be touching a company like this. Toll Brothers, again, this is one of the home builders here. They did easily beat revenue and earnings. Again, the home builders have done very good over the last year. This one especially, they're up like 100% almost, which is crazy. Again, a company that I definitely am interested in, although it is going to have to come down for me to actually pull the trigger on actually taking a position. And I mean, if you look at their valuations here, they are above all of the averages. They don't trade very expensive to begin with, but they are above all of the averages. So again, I would look for a little bit of a pullback before I would consider pulling the trigger here. The next one is going to be ADI, Analog Devices. Again, they released, they slightly beat their earnings, which is good news. This is a company I do have a small position in that I do like over the long term. Again, they're right around their historical averages. I would look for a little bit of a pullback here before I would want to take a deeper position, because I believe they are up nicely over the last year. Actually, no, they're only up slightly. So again, take that for what you will. The next one is Lucid. Again, they got hit pretty hard. And again, if you want to talk about a company that's been hit really hard over the last week and over the last year, this is a company. And I mean, they're not even making money. And again, these kinds of investments, again, I never even thought about investing in any of these EV makers, simply because, number one, the business of building cars is not a profitable business to begin with. And I know what people are going to say. They're going to say, what about my self-driving? What about my AI? What about all this? Again, the point still remains. It's not an overly profitable business, and it's not a business where you're going to be able to build a moat, right? I mean, when you look at companies that do extremely well, I mean, look at Nvidia. Part of the reason they're doing well is because they have a clear moat. Now, again, I don't think they're going to have a clear moat forever, but right now they have one. They certainly do have one. And that's the reason why I wouldn't be touching any EV maker. Tesla, if it got cheap enough, but I highly doubt it ever would. The next one is MPW. Again, another company that I wouldn't be touching with a 10-foot pole. Again, they're a classic dividend trap example here. Again, a lot of people look at this 15% dividend and say, hey, that's crazy good. But what we don't see is that their earnings are going negative, right? So there's no way they're maintaining this dividend. Again, another example of a classic dividend trap. And I mean, look at this company over the last few years. They're down like, I think, over 90%, No, they're down about 84 roughly. So again, be very careful with companies like this. Again, just obvious dividend traps in my opinion. The next one is CPRT, Copart. Again, another company that I am kind of interested in. They're kind of like an auction company. Again, they did beat earnings. Again, the problem with a company like this, again, is that is it really even possible to get a moat? Like, they're a very good company. They've done very well. But again, that's one thing that is keeping me from pulling the trigger here. EOG Resources, again, this is one of the better oil and gas names in my opinion. Barely missed earnings, but they did beat revenue. Again, like I say, one of the better oil and gas companies in my opinion. They've always done pretty well. Again, good numbers, right? Good numbers here. Teck Resources, again, if you're looking for a potential copper play, a potential commodities play, I think they're one of the better examples here. Again, they did beat EPS and revenue. Again, so keep an eye on them if you're looking for a commodities play, specifically copper, but they do a lot of different mining. Universal Display OLED, this is a company I do have a pretty good size position in. I do like this company, although they are expensive right now. They did beat earnings and revenue. Again, if it went back below maybe 150 or so, I definitely would pick some more up. But again, until then, I would definitely just be holding where we're at right now. Again, another company that I do have a smaller position in, but a decent position in, Vici Properties. They released actually decent earnings, which again, they were up a little bit on the week because of that. And again, if you're looking for an example of a company that actually has a sustainable dividend here that is higher, again, 5.5%, they're growing at 7% per year. The payout ratio, again, they are a REIT, so they're going to have a higher payout ratio. But again, if you're looking for a solid dividend play, this is another example of that, I think. Nutrien, again, they did miss earnings, but they did beat revenue. Again, they've been hit pretty hard over the last year or so. Again, if a company like this got cheap enough, I definitely would be buying. But again, until then, no. And the last one here is Mercado Libre. This is an interesting one. I think they're kind of trying to brand themselves as like the South American version of Amazon. And honestly, they are kind of intriguing to me. They did beat sales, but they missed earnings. It's kind of hard for me to pull the trigger on a company like this because it's kind of hard to value some of these foreign companies. Again, they are significantly below all of their historical valuations. But again, where should you be valuing a company like this? Like, it's very hard to know. Like, it's very hard to know in my opinion, which is why I have not pulled the trigger. So anyway, that is earnings from this past week. I think next week probably will be the last week that we can actually I can make a video about earnings. There is still a decent amount of companies releasing, so I will make a video. So again, like I mentioned earlier, please like, comment, subscribe, and stay tuned for more.